Module 2, Learning Objective 3, the Statement of Stockholders Equity. Here's a model statement of stockholders' equity. And again, if you look at a real one, it's got a lot more detail than this. This is nicely summarized. You can see that we start off with the beginning of the year's balances. We show all the changes, then we wind up with the end of the year balances. So here you can see common stock and additional paid-in capital as contributed capital would increase if the company issued more stock. Retained earnings, remember the formula for retained earnings, beginning retained earnings plus net income minus dividends equals ending retained earnings. So here's beginning retained earnings right here. Add in net income, subtract dividends, forget about other, and there's your ending balance. Accumulated OCI, remember what that is. That's adjustments to market value on the balance sheet that didn't hit the income statement. So here they had various OCI losses. We're not going to get into that. But the first line shows you, in fact I can do a little box here, watch this. I'm not going to bother because it's going to waste time. The first line shows you what was on the last year's balance sheet. The last line shows you what was on this year's balance sheet. Now let's go into what these items are again. Common stock and additional paid-in capital are contributed capital. So if the company issues more stock, contributed capital is going to go up. Retained earnings, again, is net income that was kept in the company. So it's beginning retained earnings plus net income minus dividends equals ending retained earnings. And accumulated OCI would be any changes in asset and liability to adjust them into fair market value that didn't hit the income statement. Instead, they go to accumulated OCI. And they could do this for a variety of reasons. It's really a technical accounting thing. We're going to get into it in more detail later on.